Hello, total traders, and welcome back to another market review brought to you by Orbex. So we're looking at US indices today after Fed Chair Jerome Powell has reiterated his stance on about aggressively raising rates for the foreseeable future. This saw indices drop quite significantly in the last couple of days, just over 1.5% for the S&P in particular, as it looks to break out of its symmetrical triangle pattern that it's been emerging for the last few sessions now. But the most interesting point is that the terminal rate for the Fed isn't looking likely. Sorry, that's just going to be over 5%. It's probably going to be close to 6% as it looks to bring inflation even further down to its 2% target by the end of this year. It's looking unlikely depending on what economist or trader that you ask, but it's looking most probable, sorry, that we could see another dive to the downside, roughly about the 3900 handle, and then possibly back down to 3500 in the next couple of months. So we'll see how that plays out, and we'll see what the opportunities are in store for the next few sessions as well. So, like the title suggests, the Fed and the NFP look likely that they're going to start moving a lot of the dollar around, a lot of the indices around as well. So the NFP numbers are expected to come in a little bit less than over the 500,000 that was added in last month's job report. However, surprises are in store, like we saw last time around as well. So let's just take a look on the charts at the moment. So as I said, looking to break out of this symmetrical triangle that's been developing since the last swing high, really. We had the swing high and swing low, and this was at the back of 2022 as the fourth quarter was emerging. But since then, as you can see here, we've had quite a bullish run for the S&P. We've just had, I'll just zoom in, it's a bit easy to see. As you can see, over 1.5% being wiped off in the past couple of sessions, but it doesn't look like it's really hampered the direction of the S&P at the moment. We're just seeing now what the opportunities are. There's a slight divergence on the RSI, which could possibly lead to another slight bull run. But as again, we're going to see what the NFP has in store for tomorrow. Even if it doesn't exceed expectations over 500,000, then the estimated 250,000 new jobs being added is still quite a good number. So we could see another push there. Most interestingly, though, on the 4 hour chart, what I wanted to just have a quick look at the moment is, even though we have had, pieces of bad information for the indices, it's still looking like it's in a bullish channel. It's still going on a bull run at the moment. I'll just remove these previous drawings. It's a bit easy to see, but as you can see here, we are still in pretty much bull territory as this run just keeps on progressing. Obviously, we've had these swing highs and swing lows in the past few months, but we've beat it. We've gone on to a higher high in this sense. So there's no reason why we can't have another push to the upside here and then possibly break this particular 4200 area. If that does happen, then we could expect another swing high before having a bit of a pullback again. So it's not something out of the ordinary. Obviously, a lot of economists are worried that the Fed is going to start pulling indices lower, obviously with this aggressive approach on rate hikes still in the balance. And obviously, the NFP numbers will actually add to that tomorrow. If we get a very big reading, then it could actually mean bad news for the indices as well, with the yield curves being what they are at the moment. So just keep an eye on that. And obviously, we'll have a live webinar hosted by myself in tomorrow's NFP. But for the moment, we'll just take a quick look on the Dow as well. So the Dow at the moment, to just put it back on the daily chart, we're just seeing now possibly, if I can get my chart into perspective, that's kind of creating a bit of a horizontal triangle as well. We're just waiting. We've seen two forms of support on the daily chart, and now we're just going to see if that's going to fall down again. Obviously, the Dow and Nasdaq, S&P were all hit pretty hard in the last couple of days with the Fed Chair Jerome Powell statement. However, we are looking likely that a pickup will ensue, but with the Dow, it's got very good support at the moment, roughly just under the 32 and a half handle. So with that being said, we could see a slight drop, but then another push higher in the near term as well. So this is not something out of the ordinary, but just be aware that the indices will get heavily affected if the Fed does keep on aggressively raising interest rates and having obviously no terminal rate in sight, and also keep pushing down to that. We're hoping that the inflation will come down to 2%, which it probably won't do by the end of this year. So it's 6.1%, I believe, from the top of my head. But it's coming down it's a lot slower now than it has been since last July when it was at 9.1%. So just keep an eye out on that. And as I said, join me tomorrow for our NFP live webinar hosted by myself, and my special guest will be joining me, Daniel, to go through all the opportunities and the ups and downs of the market. So thank you very much for joining me for today's video, and we'll speak again tomorrow. Bye for now.